Imagine for a moment that you are standing at the base of an immense, impenetrable fortress. You have spent your entire life working, contributing, and paying your dues, watching as a significant portion of your hard-earned income vanishes into the public coffers before it even touches your bank account. You follow the rules, you check the boxes, and you accept the societal contract that mandates taxation as the price for civilization. Now, imagine that just a few miles away, there exists an entirely different reality. A landscape where the wealthiest individuals on the planet operate under a completely separate set of physical laws. They do not merely evade taxes, they transcend the very concept of taxable income. This is not a conspiracy theory born in the dark corners of the internet, but a cold, hard, and perfectly legal reality that defines the modern global economy. While the middle class is built upon the foundation of wages and salaries, the ultra-wealthy have constructed their empires upon the foundation of assets, appreciation, and strategic debt. To understand how this works, we must first dismantle the most pervasive myth in modern finance: the idea that billionaires are wealthy because they have high incomes. The truth is far more unsettling. Most of the world's most recognizable billionaires, the titans who shape our technology, our media, and our physical infrastructure, often report a taxable income that would be considered modest by the standards of a mid-level corporate executive. They are not hiding money in offshore shoeboxes. They are utilizing a sophisticated, multi-layered financial architecture that has been perfected over decades of legislative lobbying and tax code engineering. The mechanism begins with the fundamental distinction between income and wealth. When you earn a paycheck, the government views that as a taxable event. It is immediate, visible, and inescapable. However, when a billionaire owns a controlling stake in a global corporation, that wealth exists in the form of stock, an asset that fluctuates in value. As long as that stock remains in their possession, it is merely a paper gain. It is not income. It is not cash. Therefore, under current tax laws in most jurisdictions, it is not taxable. This is the first pillar of the loophole system, the buy, borrow, die strategy. It sounds like a cynical mantra, but it is the definitive playbook of the hyper-elite. Consider the life of a typical tech mogul. They start a company, the company goes public, and their net worth skyrockets into the billions. If they were to sell those shares to fund their lifestyle, they would trigger a massive capital gains tax. Instead, they do something far more ingenious. They pledge their shares as collateral for massive low-interest loans from private banking institutions. Because the IRS and other global tax authorities do not classify loan proceeds as income, the billionaire receives millions, sometimes billions, in liquid cash to spend on super yachts, private islands, and philanthropic endeavors, all without paying a single cent in income tax. The bank is happy because they are lending against highly liquid blue-chip assets, and the billionaire is happy because they have effectively leveraged their wealth to bypass the taxman. This is not a loophole in the sense of a mistake. It is a feature of the system, designed to encourage investment and asset growth. But the genius of this strategy reaches its peak at the end of the life cycle. When these individuals eventually pass away, the debt they have accumulated is often settled through the estate, and the assets are passed on to heirs with a step up in basis. This means the capital gains tax that should have been paid over the decades is effectively wiped clean. The heirs inherit the assets at their current market value, and the tax liability that had been deferred for a lifetime simply evaporates into the ether. This is the silent engine of generational wealth, a cycle that ensures the concentration of power remains static, while the rest of the world debates the merits of marginal tax rates. But how did we get here? To understand the depth of this systemic architecture, we have to look back at the historical shift in how capital is valued compared to labor. Throughout the mid-20th century, the tax codes of major industrialized nations were designed to prevent extreme wealth accumulation, with top marginal tax rates reaching levels that would seem draconian today. However, the late 20th century ushered in a paradigm shift fueled by the ideology of supply-side economics. The prevailing theory was that by lowering taxes on capital and corporations, the wealth would trickle down through job creation and innovation. Whether or not that theory held true for the general population is a subject of intense academic debate. But for the owners of capital, the results were unequivocal. The tax code was rewritten to prioritize the growth of assets over the taxation of wages. We saw the introduction of complex instruments like grantor retained annuity trusts, or GRATs, which allow individuals to transfer rapidly appreciating assets to their heirs with minimal gift tax exposure. We saw the expansion of carried interest provisions, which allow private equity managers to classify their performance fees as capital gains rather than ordinary income, effectively cutting their tax rate in half. These are not obscure clerical errors. They are the result of decades of intense, well-funded influence campaigns. If you look at the lobbyist disclosures for any major financial conglomerate, you will see millions of dollars spent not just on deregulation, but on the precise calibration of tax code definitions. They understand that a single word in a tax statute can represent the difference between $1 billion in liability and $1 billion in retained capital. This is the loophole system, a vast interconnected web of legal entities, holding companies, and sophisticated financial instruments that function as a private tax shielding machine. The psychological impact of this system is perhaps its most profound effect. It creates a sense of inevitability. When the average person looks at their tax return, they see a burden that is mandatory and fixed. When the billionaire looks at their financial statement, they see a puzzle to be optimized. This leads to a massive disparity in how the world is perceived. For the wealthy, the tax code is a variable. For the worker, it is a constant. This creates a feedback loop where the most brilliant financial minds, the top tax attorneys, the most aggressive accountants, and the savviest wealth managers are incentivized to work exclusively for those who already have the most. Because the scale of the tax savings for the ultra-wealthy is so vast that it justifies the astronomical fees they pay for this expertise. It is a closed loop of intellectual and financial capital. But there is a deeper, more structural issue at play here. When we talk about the loophole system, we are really talking about the definition of value. In our current system, we tax the act of earning, but we provide significant protections for the act of owning. This creates a powerful incentive for the economy to become increasingly financialized. Why build a factory, hire thousands of workers, and deal with the complexities of payroll taxes and labor laws when you can shift your focus to asset management, stock buybacks, and financial engineering? This is why we see the decoupling of productivity and wages. The economy continues to grow, but the gains are increasingly captured by the owners of the assets, while the laborers see their relative share of the national income decline. The loophole system is not just about tax avoidance. It is about the fundamental redirection of economic incentives in our society. Let us dig deeper into the actual mechanics of the grantor trust. Imagine you own a company that you expect to double in value over the next 5 years. You transfer shares into a trust. If the stock performs as expected, the gains that occur inside the trust belong to your heirs, but you have already paid the gift tax on the initial, lower value of the stock. It is a bet on your own success, sanctioned and facilitated by the government. This is a tool that is legally available, yet practically inaccessible to the vast majority of the population. It requires the kind of capital, legal oversight, and long-term planning that only the top 0.01% possess. This leads us to the reality of the tax gap. Governments across the globe are currently facing massive deficits, infrastructure crises, and the need for significant public investment in healthcare and education. They are constantly looking for ways to bridge this gap. Often, the conversation turns to tax audits and enforcement on the middle class, because that is where the data is clear and the compliance is high. But the real tax gap, the difference between what is owed under a fair, non-distorted system and what is actually paid, is hidden in the complexity of the ultra-wealthy's balance sheets. It is hidden in the transfer pricing of multinational corporations that shift profits from high-tax jurisdictions to low-tax havens with the stroke of a pen. It is hidden in the valuation of private art collections, the depreciation of luxury assets, and the strategic use of charitable foundations. A charitable foundation, for instance, is often presented as the pinnacle of altruism. And while many do provide genuine public good, they also serve as a powerful tool for tax planning. By donating assets to a foundation, a billionaire can receive a massive upfront tax deduction while retaining control over how those assets are invested and even who manages them. They can effectively park their wealth in a tax-exempt vehicle, grow it tax-free, and use the influence of the foundation to advance their own interests, all while receiving the social capital that comes with being a philanthropist. It is a masterclass in reputation management and tax efficiency combined into a single, elegant maneuver. This is not to say that all tax planning is nefarious, but it is to say that the system is not neutral. It is tilted, and it has been tilted for a very long time. The complexity of the tax code is its own form of protection. When a regulation is so complex that only a handful of people in the world understand how to navigate it, that complexity becomes a moat. It keeps out the competition and ensures that the game remains exclusive. If you were to propose a radical simplification of the tax code, you would face immense resistance from the very industries that have been built to manage this complexity. The tax industry itself, the lawyers, the consultants, the software providers, is a multi-billion-dollar sector that thrives on the status quo. They are the gatekeepers of the loophole system, ensuring that the doors remain open for their clients while the rest of the world struggles to decipher the fine print. As we examine the historical trajectory, we see that the tax code has become a repository for social and political engineering. Every deduction, every credit, and every exemption was placed there for a reason, usually at the behest of a powerful interest group. Over time, these additions have accumulated like layers of sediment, creating a geological record of influence. To unravel this would require a level of political courage that is rarely seen in modern governance. It would mean taking on the very donors who fund the campaigns of the people responsible for writing the laws. It is a self-sustaining cycle of influence. The billionaires fund the campaigns. The politicians write the tax codes that favor the billionaires. The billionaires increase their wealth, and the cycle repeats. This is the loophole system in its purest form. It is not just a collection of laws. It is a feedback loop that reinforces the concentration of power at the top of the economic pyramid. But what does this mean for the average person? It means that your contribution to the state is not based on your ability to pay, but on your lack of access to the tools of avoidance. You pay your taxes because you have no choice. Your income is reported, your withholding is automatic, and your deductions are limited. You are the tax-compliant class. The billionaire, however, treats taxes as an optional expense, like a subscription service that can be canceled or negotiated down if the price is too high. This creates a deep sense of alienation, a feeling that the game is rigged, which is the primary driver of political instability in the modern era. When the public perceives that the rules of the game are not applied equally, faith in the institutions of democracy begins to erode. Think about the sheer scale of the wealth involved. We are talking about individuals whose net worth exceeds the GDP of many mid-sized nations. When this much wealth is managed outside of the standard tax framework, it represents a massive loss of potential revenue that could be directed toward public infrastructure, scientific research, or the strengthening of the social safety net. Instead, this capital is often locked away in private investment vehicles, chasing the highest returns rather than the greatest social utility. The loophole system is not just a matter of fairness, it is a matter of resource allocation. It determines what kind of world we are building. Are we building a world that rewards innovation and labor, or are we building a world that rewards the accumulation and preservation of capital at all costs? The current evidence points toward the latter. The rise of the super rich as a distinct class, detached from the standard tax obligations of the rest of society, is the defining economic trend of our time. It is a trend that is supported by the legal, financial, and political infrastructure that we have collectively built. And the most chilling part is that it is all technically legal. There is no crime being committed here, at least not in the traditional sense. The laws were written to allow for this. The loopholes were carved out with precision, and the entire architecture is maintained by the most powerful institutions on Earth. So, where does this leave us? Does the system have to stay this way forever? History suggests that systems of extreme inequality are inherently unstable. They eventually reach a breaking point where the social contract must be rewritten. Whether through legislative reform, global tax cooperation, or a fundamental shift in how we define taxable income, there are potential solutions. But these solutions require a level of public awareness and political will that currently does not exist. The first step is transparency. We need to stop looking at the tax gap as a technical issue and start looking at it as a moral and social one. We need to demand that the veil of complexity be lifted. We need to understand that the buy, borrow, die strategy is not a secret, but a public record that anyone with the time to research can access. We need to question why we continue to incentivize the hoarding of assets over the creation of value. This is not about demonizing wealth. It is about questioning the structures that allow wealth to exist in a vacuum, detached from the society that makes its creation possible. The billionaire class owes its existence to the infrastructure, the workforce, the legal system, and the consumer base of the society in which it operates. It is only fair that it contributes to the maintenance of that society in a way that is proportional to its success. As we look toward the future, the integration of technology into finance is only going to accelerate these trends. With the rise of algorithmic trading, automated wealth management, and decentralized finance, the ability to move assets and shield them from taxation will only become more sophisticated. We are moving toward a world where the financial elite operate in a near frictionless environment, while the rest of the world remains tethered to the physical and bureaucratic constraints of the traditional economy. This is a recipe for a two-tiered civilization. The question we must ask ourselves is whether we are willing to accept this trajectory. Are we comfortable with a system where the rules of the game are determined by those who have the most to lose from their alteration? The loophole system is a testament to the power of capital to shape the law in its own image. It is a masterpiece of self-preservation, but every masterpiece has a history, and every history has a context. By pulling back the curtain on how this system functions, we take the first step toward reclaiming the narrative. It is time to move beyond the surface-level debates about marginal tax rates and start looking at the structural foundations of wealth. It is time to ask, who wrote these laws, who benefits from them, and why have we allowed them to persist for so long? The answers to these questions are not hidden. They are written in the tax code, the lobbyist registries, and the private banking disclosures of the world's most powerful individuals. Consider the role of the global tax haven ecosystem. It is not just about a few islands in the Caribbean. It is about the sophisticated financial hubs, London, Delaware, Singapore, Dubai, that provide the legal scaffolding for this wealth to exist. These jurisdictions compete to provide the lowest friction and the highest level of secrecy for capital. They have become the backbone of the global economy, facilitating the movement of trillions of dollars across borders with minimal oversight. When you see a billionaire moving assets from one country to another, they are not just moving money. They are moving across a chessboard that they have helped to design. They know exactly which rules apply, which ones can be bent, and which ones can be avoided entirely. This is the reality of globalized capital. It has outpaced the ability of any single nation-state to regulate it. The result is a race to the bottom, where countries compete to lower their tax burdens in a desperate bid to attract investment, further entrenching the power of the mobile global elite. The only way to counter this is through global cooperation, a task that is notoriously difficult in a world defined by national interests. But the necessity for such cooperation has never been greater. As wealth inequality continues to reach levels not seen since the Gilded Age, the pressure for systemic reform will only grow. We have spent this time exploring the mechanics of the loophole system, but the most important part of this story is the conclusion that you, the viewer, reach. You are the participant in this economy, the person whose labor supports the systems that the ultra-wealthy bypass. You have the power to demand change, but that power begins with knowledge. The system relies on the fact that most people find the tax code too boring, too complex, or too intimidating to engage with. They rely on your apathy. By taking the time to understand these mechanisms, the buy, borrow, die strategy, the role of trusts, the influence of lobbying, and the global tax haven network, you are no longer a passive observer. You are an informed participant in the public discourse. The goal is not just to complain about the system, but to understand its architecture so well that we can begin to dismantle it. We must push for a shift in the way we view taxation. It should not be seen as a burden, but as an investment in the common good. And it should be applied with the same consistency and rigor to the billionaire as it is to the worker. Think of the impact if we were to implement a global minimum corporate tax, or if we were to treat loan proceeds against assets as taxable income, or if we were to eliminate the step-up in basis for inherited wealth. These are not impossible ideas. They are policy choices. They are choices that have been made to benefit the few, and they are choices that can be unmade to benefit the many. The loophole system is not a law of nature. It is a law of men. And what men have built, men can change. As we wrap up this deep dive into the hidden architecture of the super rich, remember that the most powerful tool for change is a well-informed public. The billionaires spend billions to keep these systems opaque, to keep the average person in the dark, and to make sure that the conversation remains focused on anything other than the structural advantages they enjoy. By sharing this information, by discussing these mechanisms, and by demanding transparency, you are disrupting the very foundation of their power. You are shining a light into the darkest corners of the global economy, and that is a threat that no amount of money can completely insulate against. The era of blind compliance is ending. We are witnessing a global awakening, a growing realization that the current economic model is unsustainable and fundamentally unfair. The loophole system is the ultimate expression of that unfairness. A system designed to protect the status quo at all costs, but the status quo is not eternal. It is fragile, and it depends on our collective silence. If you found this investigation into the hidden mechanics of the billionaire class eye-opening, if you believe that the system should work for everyone and not just the top 0.01%, then you have a role to play. The most powerful way to counter the influence of the ultra-wealthy is to spread the truth. Information is the only currency that they cannot hoard, and it is the only currency that grows in value the more it is shared. If you value this kind of deep, investigative analysis that cuts through the noise and gets to the heart of how the world really works, then hit that subscribe button and join our community. We are building a movement of informed citizens who are not afraid to ask the hard questions and challenge the status quo. Share this video with someone who thinks the system is fair, or with someone who is just as frustrated as you are. Let's start a conversation that the gatekeepers of the loophole system are terrified of. The power to change the world starts with the courage to understand it. Stay informed, stay vigilant, and don't let them hide the truth behind a wall of complexity. This is only the beginning. The deeper we look, the more we see. And the more we see, the more we can change. Join us in the next investigation as we peel back another layer of the hidden forces that shape our reality. Your engagement is the fuel for this mission. We are not just reporting on the world, we are reclaiming it. Together, we are the architects of a new, more equitable future. Hit the like button if you're ready to see the end of the loophole era. Comment below with your thoughts on which aspect of this system needs to be addressed first. Let's make this information go viral. Let's make it impossible for them to ignore the reality of what they have built. The time for change is now. Thank you for your commitment to the truth. We will see you in the next one, where we will continue to expose the systems that keep the world in the dark and bring the light of justice to the darkest corners of the global economy.